Now we are going to discuss under chapter 9 financial management. Our topic is financial planning. क्या बेटा हम क्या डिस्कस करने जा रहे हैं? We are going to discuss
Financial planning.
financial planning. Yes, this topic is one of the important and very fine topic because from this portion CBSE is always asking questions. Okay, ji? Who is asking question? CBSE is always asking question from this topic. So let's begin with financial planning. Beta, my screen is visible to you all or not? Yes, my screen is visible. Okay. Okay. So first question, which is very important for everyone, that is, sir, what do you mean by financial planning? So first, let me write here financial planning. Uh, yes, financial planning. So if we want to study about financial planning, so we have to very rigid about one thing that, sir, firstly we want to understand what is exact meaning and objective of financial planning. Because under financial planning, we are always trying to know that what is required and how much is what is required and how much is spent, right? What happening? There is three situation. Like you, there is need of 100 rupee. So first situation, try to uh, arrange 100 rupee from anyone anywhere. In second situation, you are able to arrange only 60 or 70 rupee. Or third situation, requirement was 100 rupee, but you had arranged 130. So tell me, which one situation is worst? First, second, or third?
Second.
No, third. Why? Because in this first case is ideal case. 100 rupees is required and you had arranged 100 rupees. It's very good. In second case, there is no loss. But in third case, there is loss. What is loss, sir? Here, your 30 rupees is unused. Right, beta? Hmm? If
Yes,
you
sir.
are if you are arranging money, so simply you are giving some interest for that. Na? Anyone will not give you money free without any cost, right? If you are taking money, whether you are taking from equity share or from preference share or from debts, so you have to give some interest to them, right? Right, beta ji? That is cost. So obviously here, if 100 rupees is required and you are arranging 130 rupees, means it is called over a procurement of fund. So it is not good, right? So under financial planning, what is main objective? The first objective, and or we can also say what is the requirement of financial planning. So first requirement is a smooth operation. What beta? Which operation? Smooth
Smooth.
operation. Yes, first important word is smooth operation. In any organization, in any organization, if organization is not running smooth, then there is a big problem. So for smooth operation, whatever required fund is there, you have to arrange that, right? In first situation, your operation is smooth. Yes. In third situation, your operation will be smooth, right? But in second situation, your operation will be not smooth. Why, beta? Why, beta? Because, sir, there is requirement of 100 rupee. but we are capable to arrange only 70 rupee. So obviously there will be lackness of 30 rupees always with us, right? Second thing which is also required for financial planning, and that is we have to decide or determine source of fund, means determination of source sources of fund, right? And third which is we are means we had a procured fund, we had arranged fund, so we are able to utilize that or not. So proper utilization and administration of the fund. What beta? Proper utilization and administration of fund, right? So see here, in which case your fund cannot properly utilized.
Third
One second.
case.
Third case, yes, because here 30 rupees is unused. You can't use it. So obviously, dear, in financial planning, these three items are very important. First, financial planning is required for smooth operation, right? If we are not able to arrange required fund in organization, so definitely our business or our organization cannot run smoothly, right? First. Second, we have to determine our sources of fund, means from where we are procuring, from where we are arranging, like we are arranging it from equity share. What beta? We are arranging it from whether equity share, or you are arranging it from preference share, right beta? Or you are uh, arranging it from uh, debts, means debenture holder, right beta? Huh? Debentures, or you are arranging from bank loan. You have to very specific about these sources of fund, means from where you are arranging, right? You have to determine the source of fund. And third, there must be proper utilization and administration of the fund, right? Hmm? So these three required item or required elements for financial planning, right? Now, second thing, which is more important, that is objective of financial planning. What beta? What is beta? Objective of financial planning. So I'm going to write here objectives of financial planning. Beta, our next talks cannot different from the discussion whatever we have just right now, right? Whatever we had discussed just right now, all discussions will be based on this only. So what are the objectives of financial planning? There are only two objectives. How many objectives are here, beta? How many objectives? Two objectives. So first objective I'm writing here. First objective is to ensure the funds whenever these are required. Means if you are a fund manager, so you have to ensure that whenever there is requirement of fund, you must able to arrange, right? You must avail it, right? To ensure availability of fund whenever these are required, right beta? Hmm? You make sure availability of fund, right? So to ensure availability of funds as it's required, right, Vita? Hmm? Tell me, if there is requirement of 10 lakh in your firm and you are not able to arrange it, so this is good thing or bad thing for you?
Bad thing.
It is always bad thing, right, Anu? It is always bad. Why? Because if you are a financial manager, if you are doing financial planning, so you have to ensure, you have to make yourself confident that whenever fund is required, I will arrange it. Right, beta? Hmm? So first objective is that I have confidence that whenever I require some fund, so I will arrange it at any point of time. Right, beta? Hanji? And second, you ensure that don't raise fund unnecessarily. Right? What, beta? Don't raise fund unnecessarily. Means arrange fund only that much which is required. What, beta? What I'm saying? Whatever is required, try to arrange only that much of fund. If there is a requirement of 10,000, only arrange 10,000. Why? Because if you will arrange more than that, then definitely you will pay extra interest on that, and that will be financial loss. That will be financial leakage for you. Right? Right, beta? Hanji, Arvind, are you getting it?
Yes,
So,
sir.
what are two objectives? First objective is you must ensure that whenever there is requirement of fund, you are able to arrange it. Whenever it's required, you must be able to arrange it, right? And second, don't raise unnecessary fund. Only raise that amount of fund which is required, right? Right? If anyone having any doubt, please discuss or ask your question. Jayashri beta, any doubt? Jayashri beta, any doubt?
No, sir.
No. So I think there is not any doubt at all, huh? And we had covered all aspect of this topic. Okay. So now I'm going to discuss next topic. Next topic is importance of financial management or financial planning. Because financial management is quite different from financial planning. Okay, ji. So in objective there is no any problem. So now I'm going to discuss importance of financial planning. Importance of financial planning. If we will try to understand importance of financial planning, so there are 7 points, and these all points are equally important for understanding or to getting idea of financial planning. So first first is the first importance is you are making your firm able to face futuristic problems or face the future. What, beta? You are making your firm better, right? So makes makes the firm better to face the future, right? Means you are always, by financial planning, you are making your firm to face future. Tell me, in this example which I had given, requirement of 100 rupees, and in second case you are only able to manage 70 rupee. So in this case you are able to face your future? No, not at all. Right? Right, Arvind?
Yes, sir.
Hmm. Okay. Right, Karthik?
Yes, sir.
Please, please don't sit idle, huh? Reply my questions. So if you are not able to raise fund as per requirement, or you are able to raise only 10%, 20% or 30% fund, so can you able to face your future? Yes or no?
No, sir.
Not at all. So first, by financial planning, what you are doing, you are making your firm better to face future, right? To tackle futuristic financial problems, right? First. Second is, you are always making your firm to self-dependent. What beta? What? To self-dependent.
Self-dependent.
Yes. So you are helping your firm to self-dependent, and by that way, your business is able to tackle shocks and surprises. है ना भाई? To tackle, what do you mean by shocks?
Uncertain future.
And surprises. What will happen if there will be any fire occurred in your business, right? If there is loss of money, or if there is loss of stock, right? So if you are financially planned, so you can easily tackle all those problems, right? But if you are not financially strong, then definitely you will fire back. Third, coordinate various function. What beta?
Coordinates various function.
What do you mean by that? Coordinate various functions. See beta, in any organization, in any organization, keep one thing in your brain. And what is that? Money flow is everything, right?
Yes, sir.
If your firm have very strong money flow, then you can meet with any problem. But if your firm don't have very strong money flow, then definitely you will face problem. So my dear friend, here if there is money, so if there is money flow is very good in your firm, so you can coordinate with all functions of your organization, right?
Yes, sir.
Fourth is not uneven. This point you are already knowing. Proper utilization of fund, right? Proper
Yes.
utilization of funds. It's fourth topic. It's not new. Here also we had discussed under financial planning. So proper utilization. Then fifth is also not unknown for you. If you are too much sound from financial, there is no any financial breakdown in your firm. So you can easily link your present to future, right? So
Yes, sir.
links, link present with future. Okay. And sixth one, link between investment and financial decision. What better? Link between
Investment and financial decision.
This is yes. Link between investment and financial decisions. And seventh is you if these all terms you are doing, then you are able to evaluate your performance, right, beta? So seventh point is evaluate your performance. What, beta ji? Evaluate your performance. So this is financial planning. What are the objective of financial planning? To ensure availability of fund whenever it's required, and then don't raise fund unnecessarily, right? And what are the importance? So importance first, make your firm better to face future, right? And you make yourself your firm in a position to take shocks and surprises, right? Third, uh, you must make yourself capable to coordinate with various functions. You use your fund properly. You proper utilization and administration of the fund. Link your present with future. Link between investment and financial decision. And last, if you are doing these all, means what? You are able to evaluate your actual performance, whatever you are doing, right? You can easily understand that you are doing good or you are doing bad, right, Bitaji? Any problem till this
Yes,
point?
sir.
Any problem
No,
till
sir.
this point? No. Now I'm going to discuss one hot topic which asked several times in your board examination. And what is that? Difference between financial management and financial planning, right? Financial planning, it comes under financial management. What, beta? Financial management is a big term, and under that we are getting idea of financial planning, right? Means we can say financial management is a main heading and financial planning is a subheading, right, beta? Okay, ji. So financial management and financial planning, please see into it. And if you are facing any problem, so please discuss with me, right? Now I'm going through capital structure. What, beta? Hello, hello. What
Yes,
we are
sir.
going to discuss? What we are going to discuss? Capital structure. So one by one, I will discuss every topic. Any problem, beta, till this point?
No, sir.
Hello. Okay. So first, what is meaning of capital structure? What, beta? What is meaning of capital structure? Listen to me. Look, we are arranging funds in organization. 1 minute, beta. I am coming. Wait for only 1 minute. Huh?
Yes, sir.
Hello, but I am audible.
Yes, sir.
Hmm? So first question: what is exact meaning of capital structure? Right. So first meaning of capital structure. Who is making this? Wait a minute. What? First, what is meaning of capital structure? So Meaning of capital concept structure. Hmm. See, for before going to discuss about capital structure, you have to understand balance sheet. What beta? In
Balance
balance
sheet.
sheet, tell me how many sides are there? This side is liability side, right? And this side is asset side. So for capital structure, we don't have to understand asset side. We have to understand liability side. In liability side, tell me how many points we have. First is equity share capital, right, beta? Second is non-current liabilities, right, beta? And third is current liabilities. You all can answer my one question. What do you understand by non-current liabilities? Non-current liabilities means debt, right, beta? So for understanding of capital structure, you have to understand meaning of debt means relation of debt and in relation of equity share capital. Means if we want to know or if we want to get idea of capital structure, so we have to understand one thing that capital structure means relationship between debt and equity. What beta? So if anyone is asking to you, what is capital structure? So you will answer capital, the proportion of debt and equity. What beta? The proportion, the proportion of
Debt and equity.
debt, yes, and equity, the proportion of debt and equity used for financing the operation of the business. Debt and equity used for operation, used for operation of the business.
Used for the financing operation of the business.
Used for, yes, used for financing. Financing means, what do you mean by financing? Can you define financing? Financing means the sources of fund where from where we are taking, right? Financing means, financing means beta sources of fund, right? So tell me whether debt or equity both are source of financing only, na? Means we are taking fund from there, whether from debt and whether from equity. Here debt means long term debt, right? Had we discussed this debt equity ratio, total asset to debt ratio, proprietary ratio, we had
Yes,
discussed or
sir.
not?
Yes,
Yes.
sir. We have discussed
So
it.
yes, so same discussion is going on right now here. So the proportion of debt and equity used for financing operation of business is known as capital structure, right? Is known as capital structure, or in other words, in other words, in other words, uh, capital structure means proportion of debt capital and equity capital. What beta? In other words, uh, the structure or the proportion of debt and debt and debt and equity, capital in capital structure. Right, beta? Means we are only talking about equity share capital here. Means proportion means out of total fund which we had finance from outside for long term, how much percentage is from debt and how much is from equity, and this is known as capital structure. Can you all answer me? Debt equity is part of which type of ratio? Solvency, liquidity, Hanji,
Solvency.
or liquidity?
Solvency.
Solvency.
Liquidity is current ratio, current assets by current liability.
It is comes under solvency, right? You are right. Right? Huh? Any problem, beta? Hmm?
No, sir.
Okay, ji. So now we have to understand few more terms. Then we will go to numerical portion. What factors are affecting this ratio? Affecting factors affecting capital structure. So what are the factors which are affecting capital structure? We will see. Can you take first name as you all are already knowing this? Yes. First first topic is first topic is cash flow statement. It's not new, na beta. We had already discussed about this. Whenever factors you are writing, so you can easily write cash flow position, right? So first is cash flow position. Second is interest coverage ratio. But I had taught interest coverage ratio. Hmm? I think not, right now.
No, sir.
Interest coverage ratio means EBIT means earning before interest and tax divided by interest, right? Hmm? It is formula of interest coverage ratio. High interest coverage ratio means your company is very good condition, right? And and if interest coverage ratio is low, it means your company is not in a good ratio. It is called ICR. ICR means interest coverage ratio. Any problem, beta? Hmm? Third is debt service coverage ratio. What beta? Debt service.
Excuse me, sir.
Yes.
Sir, can you repeat what is full form of EBIT?
EBIT, it's not EBIT, it's EBIT. Earning before interest and tax. What beta? I will discuss it, don't worry. In next slide, I will discuss, okay? I'm writing here, but I will discuss
Yes,
it
sir.
in detail. Earning before interest and taxes, right? Debt service coverage ratio. It is called DSCR. What beta? DSCR ratio means debt service coverage ratio equals to profit after tax PAT plus depreciation plus interest plus non-cash expenses written off. What beta? Like provisions, right beta? Non-cash cash items like goodwill written off, right, beta? Or any loss written off which is non-cash or provisions. So non-cash items written off divided by, it's very important, preference dividend, preference dividend plus interest and plus repayment of obligation, which is called installments. What beta? Repayment obligations. This is called installments. What beta? What we are calling them? Installments. So preference dividend plus interest and plus repayment obligation. This is formula of debt service coverage ratio. Right? Hello.
Yes, sir.
Let me ask to all, because this at this point of time I'm discussing tough topics. Anu beta, any problem till this point? Arvind, any problem beta? Silent. Jayashri beta, any problem?
No, sir.
Hmm. Arvind, no sir. Why you are not responding, Arvind? Are doing there is any mess? Back to you. Anu beta, yes beta.
Yes, sir.
Are you getting beta? Are you getting whatever I am discussing here? Hmm?
Yes, sir.
Any problem?
No, sir.
No, definitely. Okay. So these are the problems. These are the factors which are giving impact. You will have to write only 6 to 7 because your maximum marks is 6. So you all must write 7 points. So 3 points I had written. I'm going to write my fourth point. Before that, oops, wait a minute. So next point is means fourth point is return on investment. What beta? Means whatever you are investing, you have to see your return. So return on investment, because if there will be not return, so how you will return, right? If you are taking funds from various sources, you are using in your business, you are applying in your business as an investment, and you are not getting return. So if you are not getting return, so how you will return to others, right? Whether to debt or to equity. So return on investment is also very important factor which are giving impact to capital structure. Third is cost of debt. Fifth is cost of debt. It is also very important topic. Why? Because if you are taking fund from whether loan from bank or from debenture holders, so you have to give some interest to them, right, beta? So you have to be very careful while you are borrowing your funds that your cost of debt must not inflate, right? Then tax rate. Sixth point is tax rate. You have to take care about tax rate. And seventh point is a cost of equity. What beta? Cost of equity. Eighth is floating cost. What beta? Or we are also calling it flotation cost. Flotation cost. So please only learn till point number 8.
सर
Otherwise, ये
फ्लोटेशन कॉस्ट क्या होता है?
फ्लोटेशन कॉस्ट क्या होता है? वेरी गुड. देखो बेटा, yesterday I had already discussed about it. Flotation cost means, uh, see, if you are arranging your money from issue of shares, right? So you will go na, you will issue it na, there will be some underwriter, so you will pay underwriting commission,
Yes, sir. Yes,
underwriting
sir.
fees, or share issue expenditure, right? These all are expenditure, or you will advertise that I am going to issue my shares. So these all are fixed cost. Flotation cost are fixed cost which you have to give for procurement of your fund, right? Like you want some money, or you want to arrange some money, but directly you can't do. So you are going to some brokers. Please arrange money for me. So tell me if brokers will arrange money for you. So they will take some cost or not, or they will charge some fee or not. So that is called flotation cost. Okay, beta ji? Any problem? Any problem?
No
Hello.
problem, sir.
No,
Okay. So
sir.
I think this class is going tough now, right? So I'm taking break. But at what time tomorrow you all can take class? In the morning, 8 o'clock,
Sir,
you all can. No.
no, sir.
Oh,
School होता है, sir.
evening. So okay, evening by 6 I will be here and I will finish this chapter. Okay.
Yes, sir.
Hello. So okay. Thank you very much. See you all tomorrow. God bless you all. Arvind beta, please call me after